Well, good morning, good afternoon, everyone. I'm Elliot Kallen, and I am from Prosperity Financial Group. And this is a minute or two or three about our predictions for next year. This is just my opinion, one man's opinion who's been doing this for 30 years in the financial world. So 2025 was a pretty good year for a lot of investors, double-digit returns. If you're on the aggressive side, the growth side, you have right now double-digit returns as I'm recording this. If you're on the bond side, first year in about 3 or 4 years, you actually made some pretty good money on the bond side. Now, we see next year lots and lots of volatility, more than this year. I don't know if you remember back to April. April was a really bad year, close to a 20% correction just in the month of April. Now we see several of those next year, 10, 15, 5, 12% corrections in certain months. It's just going to happen. We see the bond market generally having a pretty good, steady growth year. So the conservative investor, the hare, will look like they're beating the rabbits in certain months, but at the end of the year, the rabbits win, and we are going to have a pretty good growth year, but not as good as this year. That doesn't mean it's bad. It means we could still hit 10%. We're not doing 20, 25, but we might have some months that are really good. Tech will rebound. We've had a very soft quarter in the fourth quarter for technology, called a rotation out from technology to the broader indexes, but we'll go back into technology as investors start getting more comfortable in AI. Right now, there was too much money going in there too fast. Money came back out. Profits came back out. We're just leveling out the playing field. But next year should be a good year for AI, especially if some companies can prove that they've made money or become more efficient because of AI technology. If that happens, all hands on deck. If not, the consumer, the investor could get scared and think, uh-oh, is this an AI bubble? Which I don't think it is. This is not the year 2000, 1999. I think we're actually have some reasonable things going on in that world. But I do think that lots more companies make money. Who doesn't make money next year? Let's talk about that. U.S. defense stocks, good money. Why? There's a war in Ukraine still going on. Maybe there's a peace settlement, whatever. If it doesn't expand into other countries, it's a dividend for our defense industry. If it expands, you're going to see a market correction because nobody likes expanding wars. Israel, Gaza, the whole Middle East, right now it's a very fragile piece, very fragile. If it doesn't get worse, but it continues to get better, the market gets better. Who's the winner on that? The U.S. defense industry, again, is the winner. If Saudi Arabia joins the Abraham Accords, that's the peace process where they fully recognize Israel and what's going on there, that means that Israel exchanges technology, which is amazing. I know whether you like Israel or not, they have amazing technology. They're going to exchange it with Saudi Arabia. Saudi Arabia is a big winner. They are going to be also buying more American products. So there's some winners on this thing. AI could be the huge winner if some companies prove that this is working for them. The defense industry is the second winner. Travel has had a pretty good year. It seems to be still going well. I do not personally bet on travel stocks. That means I don't bet on airlines. I don't bet on the hotel industry. Why? Too volatile for me. Not enough money being made. But that doesn't mean that some companies don't make it, like Viking Cruises and so forth. They make it because they're more self-contained. So you got to understand that. Now, peace dividend means more money. That's a good thing if we have that, PEACE dividend. Travel, we just talked about, and the airline industry, the U.S. defense stocks, AI, we just talked about. Anybody else that we expect to do well? Industrials. If the economy does grow at 3 or 4 or 5% next year, which some economists predict, not everybody. If it does, it's a great dividend to dividend-paying stocks. That means that you want to be in a broad-based industrial growth market. So we recommend that as well. Spread your money out, diversify your money. We do that in our portfolios, so you understand all that. So what's bad is the debt of the United States. That clock of the U.S. national debt is flying by faster than ever, $37, $38 trillion. There is a number that is going to be too high. It won't be hit in 2026, but there is a number that will just downright scare the bond market away. And that could happen. What that is doing is driving down the value of the U.S. dollar relative to other currencies. And that means international currencies, international companies do better overall than U.S. because of the currency deflation of the U.S. So that means something to those people that are working internationally. If you are buying large companies and they do business internationally, it helps quite a bit in your world. Again, expanding war in Ukraine, roots it for everybody. Expanding more to the Middle East ruins it for everybody. Venezuela, a loose cannon of what's going on here. Again, doesn't matter whether you agree or disagree with Venezuela, of what's going on right now. But if Venezuela does get a new president in there, and that president is very nice to the United States, they could begin to woo American companies out of China for cheap labor and manufacturing to Venezuela. Long term, the U.S. thrives with that. American companies thrive with that. And we now get Venezuela back, kind of like the Monroe Doctrine. And that's what that's going back to. Again, you could disagree with everything going on there. I'm just trying to shoot straight on the business side of it, not necessarily the political side of it. What does worse? If Russia, Cuba get involved with it and some things happen, and we just want to make sure it's not going on. So these are just some ideas for next year. Be invested. Even in these bad markets, look for pullbacks as new opportunities. I'm invested personally. I think it'll be a pretty good year next year, but again, more volatility. So just things can happen. Stuff is going to happen. Something's going to hit the fan and blow up next year. Just be aware of it. It's okay, because at the end of the day, we all turn out okay, and stay invested. If you've got more questions, more ideas, I've got a newsletter that's coming out for end of the year. Let's talk about it. Let's get a financial plan on the books. Let's talk about your retirement, where we're going with your retirement, because this is so important now. What questions need answering? 925-314-8503. Make an appointment with us. Make an appointment with me. We'd love to talk to you. Elliot, ELLIOT, at prosperityfinancialgroup.com. Easy to reach us. Very easy. Two partners of the firm, Derek and Andrew. We are here to meet with you and do a great job. Have a great New Year's, everybody. Be safe, be smart, be sound. We'll see you in 2026. Take care.